A seismic shift is happening. China is making a major move. It is drastically reducing its dependence on US oil. This is a significant shift with far-reaching implications. China, the world's largest energy consumer, is looking for new sources of oil. This shift is driven by several factors. One key factor is the desire to diversify. China wants to avoid relying too heavily on any single supplier, including the US. Another factor is the growing economic and political clout of BRICS nations. China sees BRICS as reliable partners. These nations offer a stable and increasingly important source of oil. This shift in oil imports is a clear signal. China is reorienting its energy strategy. Energy security is paramount for China. It is the bedrock upon which the nation builds its economic ambitions and ensures the well-being of its vast population. A reliable energy supply is crucial for its economic growth and social stability. Without it, the engines of industry would grind to a halt and the lights of its cities would dim. Overdependence on one supplier can make China vulnerable. This vulnerability can manifest in various forms, from supply chain disruptions to price hikes. Disruptions, whether natural or political, can have severe consequences. These disruptions can ripple through the economy, affecting everything from manufacturing to transportation. China learned this lesson the hard way. Historical events have shown that relying too heavily on a few sources can lead to crises. Past reliance on a few Middle Eastern suppliers exposed it to risks. These risks included geopolitical tensions and regional conflicts that could disrupt supply. Price volatility and geopolitical turmoil threatened its energy security. Fluctuating oil prices and unstable political climates made it clear that a change was needed. The need for diversification became clear. Diversifying energy sources would mitigate risks and ensure a more stable supply. China embarked on a mission to broaden its energy sources. This mission included investing in renewable energy and exploring new oil regions. This strategy led to significant investments. China poured billions into overseas energy projects and new infrastructure. China poured resources into renewable energy and infrastructure projects. Solar and wind farms began to dot the landscape, and new facilities were constructed. Pipelines, ports, and refineries were built. These projects were essential to support the diversified energy strategy. These efforts aimed to secure a steady flow of energy from diverse sources. By diversifying, China reduced its reliance on any single supplier. The goal is clear: never be at the mercy of one supplier again. China's strategy is to ensure energy independence and security for the future. China's shift away from US oil is not just about economics, it's a strategic move with geopolitical implications. By reducing reliance on the US, China gains leverage. It reduces its vulnerability to US pressure. This shift strengthens China's relationships with BRICS countries. It fosters closer political and economic ties. Increased energy cooperation enhances mutual trust and interdependence. This aligns with China's vision of a multipolar world. China champions a global order. In this order, power is distributed among several major players. Reducing dependence on the US and empowering BRICS nations serves this goal. It reshapes the geopolitical landscape. The balance of power is subtly shifting. The trade war between China and the US played a significant role. It accelerated China's decision to reduce reliance on US oil. The dispute exposed the vulnerabilities of depending on a single supplier. Tariffs and trade barriers disrupted the flow of goods. The energy sector was not spared. China realized the need for alternative suppliers. It needed suppliers that were less likely to be affected by US actions. Political tensions between the two superpowers added fuel to the fire. Disagreements over Taiwan, the South China Sea, and technology further strained relations. These tensions underscored the risks of relying on a geopolitical rival for essential resources. China's strategic shift gained even more urgency. Section 5: The Rise of BRICS, New Partners in Energy. As the global energy landscape shifts, the BRICS nations are emerging as pivotal players in this new era. BRICS nations emerged as key beneficiaries of China's strategic shift. This alliance is not just about politics, but also about securing energy resources for the future. Brazil, Russia, India, and South Africa offer vast energy resources. Each country brings something unique to the table, from oil and gas to coal and renewable energy. They are eager to expand their market share. The energy sector in these countries is seeing unprecedented growth, driven by both domestic needs and international demand. Russia, an energy powerhouse, became a major supplier. Its influence in the global energy market has only grown stronger thanks to its vast reserves and strategic partnerships. Its vast oil and gas reserves provide a reliable alternative to U.S. sources. This diversification is crucial for countries looking to reduce their dependence on any single supplier. The Power of Siberia pipeline, a testament to this growing partnership, now delivers natural gas directly to China. This pipeline is a symbol of the deepening ties between Russia and China. Brazil, with its substantial offshore oil discoveries, is another significant player. The country's energy sector is booming, attracting investments from around the world. Chinese companies are heavily invested in Brazilian energy projects. These investments are not just financial, but also involve technology transfer and expertise sharing. This strengthens economic ties and secures a steady flow of oil to China. The collaboration between these two nations is a win-win, ensuring energy security and economic growth. BRICS nations are stepping up to meet China's growing energy needs. This partnership is reshaping the global energy market, making it more diverse and resilient. Section 6. Cementing ties. China's investments in BRICS energy. China's commitment to BRICS goes beyond simply buying oil. It involves significant investments in energy infrastructure and production. These investments create a win-win situation. Chinese companies are financing pipelines, refineries, and exploration projects. This helps BRICS nations develop their energy sectors and boost their economies. At the same time, it secures long-term access to energy resources for China. These investments are strategic. They solidify China's partnerships with BRICS countries. They reduce reliance on traditional energy routes controlled by the West. These investments are reshaping the global energy landscape. They are creating a new energy order. Section 7. Implications for the US dollar. A potential challenge? China's shift away from US oil could have significant implications for the US dollar. This move is not just about oil, it's about the broader economic and geopolitical landscape. As the world's reserve currency, the dollar enjoys a privileged position. This status allows the US to borrow at lower costs and run larger trade deficits with minimal economic repercussions. Oil transactions are typically conducted in dollars. This practice, known as the petrodollar system, has been a cornerstone of the dollar's global dominance. However, with China reducing its dollar-denominated oil purchases, the demand for dollars could weaken. This shift could signal a broader move away from the dollar in global trade. This could potentially challenge the dollar's dominance. A reduced demand for dollars might lead to a depreciation of its value, affecting global markets. It could lead to a more multipolar currency system. Such a system would see multiple currencies sharing the role currently dominated by the dollar. China has been promoting the use of its own currency, the yuan, in international trade. This is part of a broader strategy to increase its influence in global finance. The shift in oil trading could further advance this goal. By conducting more transactions in yuan, China aims to reduce its reliance on the dollar. This has the potential to reshape global finance. A more diversified currency system could lead to greater stability and reduce the risk associated with any single currency. The dollar's supremacy, while not immediate, could face a challenge in the long run. The evolving dynamics of global trade and finance suggest a future where the dollar's role is less dominant. Section 8. Winners and losers. Reshaping the global energy landscape. China's strategic shift creates both winners and losers in the global energy market. BRICS nations stand to benefit significantly. They gain a major customer and see their energy sectors flourish. Countries like Russia and Brazil gain leverage. They become key players in a changing energy order. Their economies get a boost from increased energy exports. The geopolitical landscape shifts in their favor. However, the United States, as a traditional energy exporter, faces potential losses. Reduced demand from China could impact its oil industry. It also loses some leverage in its relationship with China. The energy landscape is being redrawn. New alliances are being forged. Section 9. The future of US-China energy relations. The future of US-China energy relations remains uncertain. The strategic shift and ongoing tensions suggest a potential decoupling. However, complete separation is unlikely. The United States remains a major energy producer. China, despite diversification efforts, will still need to import significant amounts of energy. There might be opportunities for limited cooperation in areas like liquefied natural gas or LNG. However, the dynamics have fundamentally changed. Trust is eroded. Competition and rivalry are likely to persist. The energy relationship is no longer characterized by the interdependence of the past. Section 10. A new era. BRICS and the Global South take center stage. China's strategic shift signifies a broader trend. The Global South, led by BRICS nations, is asserting itself on the world stage. These countries are no longer content with being passive players in a Western-dominated order. They are forging their own paths, driven by their own interests and values. The energy sector is just one example of this shift. We can expect to see greater cooperation and integration among these countries. This has major implications for global governance, trade, and security. The world is moving towards a more multipolar system. Power is becoming more diffuse. The Global South is taking its rightful place at the table. Section 11. Conclusion: navigating the shifting sands of global energy. China's decision to reduce reliance on United States oil is a game changer. It is a strategic move with profound implications for the global energy market, geopolitics, and the balance of power. This shift highlights the growing importance of BRICS nations. It underscores the changing dynamics between the United States and China. As the world navigates this new energy landscape, one thing is certain: the era of United States dominance is fading. A new era, marked by multipolarity and the rise of the Global South, is dawning.